there neighbors, it's Nicole Fetter, your local Arizona realtor. Today, we're going to once again talk home loans. Reverse mortgages. What is a reverse mortgage and who qualifies to use them? A reverse mortgage is also known as a home equity conversion mortgage or an HECM for short. They're FHA insured government-backed loans. Private lenders do make reverse mortgages as well, but I would never recommend you use them as private lenders do not use the same regulations as FHA insured loans. These loans are used for people that are 62 years or older and have a considerable amount of equity in their property. They can borrow money off the equity of their property and not have to make any monthly payments back to the bank. They don't make any payments until they pay the bank back in one lump sum when they either pass away or they move out of the property. If they did have an heir living with them in the property, the heir would be required to move out and sell the property when the individual owning the property either passed away or moved out of the property themselves. They can take the money in a lump sum, an equity line, or monthly draw. Basically, it is a way to borrow money off the equity of your house without having to have a monthly debt for doing so. 1. Lump sum. This is where you get all the money at once at close. This is the only option that gets you a fixed mortgage rate for the term of the loan. The other 5 options will have an adjustable rate. 2. Equal monthly payments. I think it kind of says it all right there. As long as one of the borrowers lives in the property as a primary resident, you will continue to get an equal monthly payment from the lender. 3. Term payments. These are agreed upon monthly payments for a specific term. For an example, 10 years. So you'll get an equal monthly payment for 10 years. When that 10 years ends, you will no longer get payments. You will not be required to pay back that loan until you move out of the house or pass away, but you do only get the payments for that agreed upon term. 4. Line of credit. This is a specific amount, a line of credit that you can use whenever you wish up to that amount. One of the benefits to the line of credit is you are only charged interest on the amount you have drawn. Number 5, equal monthly payments and a line of credit. This is where you get an equal monthly agreed upon payment each month, but you also have a set aside line of credit that you can use if you need extra funds. Number 6, term payments and a line of credit. This is where the borrower gets an equal amount monthly payment for a certain term. That first example was 10 years. And they also have a line of credit that they can draw from during that term or even after the term is over if they need additional funds. Let's talk requirements to qualify for a reverse mortgage or home equity conversion mortgage. You are not required to have any specific FICO score or income documentation. However, there are regulations. You are required to be 62 years or older and have a considerable amount of equity in your home. Usually 50% equity is required. You will also be required to pay standard loan fees, loan origination fees, and other standard loan fees to get the loan. You will continue to be required to pay your taxes, insurance, HOA fees, and any other maintenance fees because you are required to keep your home in good repair throughout the term of the loan. You will also be required to take a class that's the pros and cons of taking out a reverse mortgage. Now that you know not only what a reverse mortgage is or a home equity conversion mortgage, but who qualifies, next week we will go ahead and talk about the pros and cons of home equity conversion mortgages so you can go ahead and decide whether a reverse mortgage would be right for you. If you have any questions, please call, text, email, or direct message me. I am always here to help with your home buying and selling needs. Please remember to like and share this video with your friends and family. Help continue to educate them on the home buying and selling process. And remember,